And it's 10 a.m. in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. Let's start off with news. Oil Market City Organization of Petroleum Exporting Countries and Allies, OPEC Plus, have agreed to stick to their plan of small output rise of 400,000 barrels per day in April. The decision by the Energy Alliance comes despite calls for more crude as prices continue to rally on Russia's supply disruption fears. According to OPEC, the current volatility in oil prices is not caused by changes in market fundamentals, but by current geopolitical development. Meanwhile, oil prices jumped on the news. The international benchmark rose by $114 a barrel. U.S. West Texas Intermediate crude stood at $111 yesterday, but OPEC alone accounts for around 40% of the world's oil supply. And the Nigerian National Petroleum Company Limited and its partners have signed a gas aggregation agreement with Dangote Fertilizer Limited to increase local production of fertilizer in the country. The deal was signed during the ongoing Nigeria International Energy Summit in Abuja. According to the Group Managing Director of the NNPC Limited, Mr. Mele Kiari, the deal was part of the company's drive to ensure greater gas utilization in the country. In his part, the chairman, Dangote Group, Aliko Dangote, says the agreement was significant to the economic growth of the country. Take a listen.
What it means is that we are progressing our gas monetization processes, getting value from the abundant gas resources that we have in the country, so that we can create local value, including monetization of this gas. And what we have done is giving them enough gas so that they can make more fertilizer, so that we can have locally, and also we can export it to make money from it.
Nigeria used to import 100% of the fertilizer. Today, Nigeria is a net exporter. Not only net exporter, today Nigeria has a capacity of over 5 million tons for export alone. And domestic market is about 1.2, 1.3 million tons.
And now to our first conversation. We'll be talking tax today. The Lagos State Internal Revenue Service recently announced a deadline for filing of annual tax returns by employers of labor in Lagos. That was earlier in the year. But now individuals have a deadline for March 31st. We'll be discussing the implications and other tax matters today with Mr. Samuel Oyenitu, Head Criminal Prosecution Unit, Lagos Inland Revenue Service. Great to have you on the program. Good morning.
Good morning. Thank you.
You know, normally when you have the tax man around, you know, everyone gets nervous, you know. But it's good to have you. Can you paint a picture, you know, of what tax collection in Lagos, you know, was like in 2021, like in terms of numbers? Yeah.
Well, the year 2021 was a post-COVID era, so to say. And then, notwithstanding that, there is a level of voluntary compliance in the state in which most of the companies who pays their pay, let me say employers now, voluntarily comply to a reasonable extent. And then to this extent, the state was able to at least reasonably meet up its target for the year in question, so about 80% of the internally estimated revenue for the year.
Yeah, so how would you describe it? Was it good?
Yes, it's good, but not good enough because the COVID era, the aftermath of NSAS also affected a lot of things. But it's not bad, it's good. 2020 was also good as well.
And what would you say, you know, are the challenges, you know, with tax collection in Lagos State?
Well, the challenges are numerous, but to look at them from this perspective, we have the informal sector seems to be the most challenging areas. Because for the formal sectors, they're always complying. Their employers will always ensure to a reasonable extent that they comply. However, with respect to the informal sector, especially the professionals, they find it a bit difficult. You know, some of them want to bring out laws, or simply because they are not really conversant with the laws on taxation, they tend to defend, you know. So we have legal tussles here and there We also have ignorance on the part of some, the market women and all that. So that, to a reasonable extent, has affected collection. And then also we have challenges in the areas of people either relocating to other states or the aftermath of the pandemic and the NSAS. Really affected a lot.
All right, so, talking about, widening this, the tax net, and you did mention the, informal sector, what's been done to, bring in the informal sector, into the tax net at this point? What are the plans there?
Well, we have a unit in charge of that. We have a director who is an erudite and well experienced in that area. That notwithstanding, to the best of my own knowledge, we've tried to engage some of these stakeholders. I would say stakeholders now, the market women, the market men. We've engaged them. We go on sensitization from time to time. Aside from that, we also engage the professionals. We try to go through their registered associations and ensure that something is paid in. In the past, we still have it now. We call it the presumptive tax, which is to pay a reasonable amount every year. So that, in an essence, is bringing them into the tax net. And so the issue of filing of returns is also another area where you ask people to file. By the time you file in subsequent years, you're already in the net. We'll be able to assess you properly and adequately.
Yeah, talking about filing, what's the process for that, for individuals?
Yes, for individuals, it's clearly stated in the law by Section 41 of PITA. When I say PITA, I mean Personal Income Tax Act 2004 as amended, makes provision and makes it mandatory that all individuals resident in a state must file. We have this provision in the Constitution too. Section 24, paragraph F of the Constitution, 1999 Constitution as amended, also provides that all individual citizens of Nigeria must declare their incomes honestly and pay their taxes promptly. So what that implies is that every individual, irrespective of whether your employer had done that on your behalf or not, you are liable to file your returns on or before the 31st of March every year. Subsection 3 of that Section 41 provides clearly that within 90 days of the commencement of every relevant year, and every relevant year commences on 1st of January, so on or before 31st of January, all citizens of Nigeria, particularly those residents in each state, are liable to file their returns on or before that period.
So as an employee, my employer is also going to file?
Yes, by provisions of Section 81, subsection 2 of the Personal Income Tax Act. The employer owes that duty. He owes the duty to file on behalf of his employees, all the emoluments and all the amount of income and all that things that were received by that employee for the preceding year, the employer is liable to file. That notwithstanding, Section 41 says that all taxable persons, so including the employee, are liable to file on their own. Yeah, so notwithstanding that filed by the employer.
So aside, what your employer files.
And then the reason for saying that is because in so many cases, these employees, the employer only file for their salary income. Now, for instance, I'm a civil servant, and then I have some other streams of income. For instance, I'm into agriculture, which the law allows. I'm saying, for instance, and I do agricultural business. I earn income from that. Or I have a property of my own. I earn rental income from that. I will not declare that to my employer. And my employer may not even know. And will not declare. We only declare my income. So these are things that the individual who knows himself or herself better will include in the returns he's filing to the state government.
Right. But what happens to the unemployed now? Take, for instance, and, just the average hustler on the street. What's in it?
Yes, the law is very clear on who pays tax, and that is someone who earns income. So it is subject to earning of income. You don't pay tax when you are not earning income. But from the point you are earning income, you are liable to pay. So for the filing, it is expected that even when you don't earn income, and you have earned income at one point or the other before, As a self-employed, you're also required to file. Even if it's going to be a new return, just state it clearly. It's a statutory obligation to file. So whether or not you have earned income, as long as you are a taxable person, you are liable to file. And so when you do, that will enable the relevant tax authority to be able to assess you properly. That's just the essence of the filing, to assess you properly as opposed to issuing you with the best of judgment assessment.
And the deadline here, the 31st
of March
for individuals, is there a possibility of extension? And what happens if you don't?
Yes, the law is very clear. It's 31st of March. So if at all, like in 2020, the agency decided to extend, and just because of the COVID-19, extended to March. Last year, we extended till, I think, February, thereabout. So, but this year, the chairman has said there will be no extension. And the reason is this: year in, year out, people have, because we prosecute them in court, we have experienced people who are not taking this seriously. In other crimes and jurisdictions, people cannot escape filing of their tax returns. But here in Nigeria, people take it for granted. And so we want to really go all out, prosecute, and make some scapegoats. Okay. So there will be no extension.
Yeah, scapegoat, that doesn't sound fun at all. But what's the process like? You know, how easy is it, you know, for the average, you know, individual to file these returns? You know, are you leveraging technology? You know, how do you make it easy for the layman on the street?
Yes, as you know, that Lagos State is a pioneer when it comes to innovations, when it comes to technological development. And in this area, since some few years ago, since 2016, but practically in 2018, we commenced the online filing of returns. And you can do that by logging into www.etax.lirs.net. So anybody can file, as long as you can use your phone to browse or to log into any site, Facebook, Yahoo, and all, Gmail. You can easily, once you log in, even if you don't have a, once you have a payer ID, that's the first thing. A payer ID is the name with which you pay taxes, which you can create online. Then you don't have a password, just click on forget password. A password link will be sent either to your email or to your mobile phone number. And with that, you can easily log in, create, and file. There is a template there. If you look at the form, the website, you will see a template where you can download the form. The format is there. Just confirm with it your name in terms of phone number. Surname first, the middle name, first name, phone number, and all that.
All right. So
for the few who cannot do that, you can also walk into the office. They will do that on your behalf.
Okay, so you have people that can
actually...
So
we have all tax stations who are well equipped with this. You can also come to the head office or contact any of the staff. They have an admin platform where they can log in for you. And if you have questions, you can log in or call on our phone numbers.
Right. Right. So paint a picture of the penalties here for me.
Very well. There are two ways to this. First, we look at it from the civil angle. The provisions of Section 54, subsection 3 of the Personal Income Tax Act 2004 as amended says the agency or the relevant tax authority has the power to raise a best of judgment assessment on a taxpayer who failed to file his returns. And now there will be no basis for filing. So on that, a best of judgment assessment will be raised based on fair terms, looking at the using various parameters to assess this taxpayer. And then there are also penalties of 10% under Section 76 of the PITA that imposes 10% penalty of the amount due, and also interest at the central bank monetary rates will be imposed. That's in the civil aspect. In the criminal aspect, we also have imposition of fine. For individuals, it's 50,000 naira. But it is not about the 50,000 naira. The law provides that the person will be held liable upon conviction. So the payment of the penalty is not just the rate or the fee there, but it's about the criminal conviction. And whosoever has been convicted becomes a convict, an ex-convict. And so will be denied of certain privileges in the country. And so it is advisable for one to file on or before that deadline. So we have various sections. Section 94 also attaches terms of imprisonment apart from just the fine. So we could combine all these together to find an individual who fails to file.
Well, I'm sure some people are shaking, listening to all of that. That's quite heavy. But tell me about this best of judgment assessment.
Yes. Okay, a best of judgment assessment as provided under Section 54.3 is that where a taxpayer fails to file his return on or before the deadline, then the relevant tax authority has the power to raise an assessment. It's called an estimated assessment on the taxpayer. And when we do that, some of the parameters we use is not limited to that, but particularly we look at the status, we look at the way of life, where does he live?
How do you track lifestyle?
Well, we have an intelligence unit that is well equipped to do that. You may not know, you may go for a function, you find us there watching you, looking at your lifestyle, the cars, the schools your children attend, and then the net worth. So we call some high net worth individual. So there are so many parameters which we may not disclose all. But at the end of the day, when you find out that we have all this information about you, you have no other choice than to file. However, the law also allows that you still object to an assessment that has been raised against you. So even if a best of judgment assessment is raised against you, you have a right to still object under Section 58 of the Personal Income Tax Act. However, if you fail to object within the statutory period, it becomes final, and you will be liable to pay the tax.
Quite interesting, because, most people will say, the concern is, what is this our tax being, used for? At the end of the day, and that's why you see so many people are quite reluctant, to pay some of these taxes. What are you guys doing, to change that narrative?
Well, if you look at Lagos State compared to all other states, you see that tax constitutes a large crunch of the income of Lagos State. And that's why in time past we don't rely on revenue from oil or even from VAT. You see that Lagos State has judiciously used tax income well to the development of the states. There might be some few areas where this development has not touched, but Lagos State is working all hard to ensure that this cuts across. If you look at a definition of tax, it says it's without direct benefit. So it might not be me that will enjoy it directly, it might not be my street, it might not be my environment, but as time goes on, it's going to go all around. You will see it in all our schools, with roads, with infrastructures and all that. Lagos State does not joke with the tax.
Right, and I see you guys are targeting 550 billion naira revenue to assist the government to transform the state. How achievable is that? Quite a huge sum.
Well, it is achievable if we can cross all the T's and dot all the I's.
Right.
If we tap deeply into the informal sector. There are some who are still not complying. There are some who are using the influence of some tax experts to take advantage of the loopholes in the law. Okay. So if we can cover all loopholes, I believe we'll get
all right. Well, I want to believe, we're all, tax compliant. And I'm sure you will agree that Ladi Williams is tax compliant.
Well, to the extent of your personal income, your PE.
Yes,
but when it comes to other sources of income, I wouldn't know if you have other sources of income.
You and I, between you and I. All right. Well. Thank you so much, Samuel Yejitu, Head Criminal Prosecution Unit, Lagos Inland Revenue Service. Thank you for coming on the program.
Thank you very much. You're welcome.
All right. So after the break, commodities market update is next. Do stay with us. This is Business Morning. All right, time for commodities market update. Let's look at what's happening in oil market. We see Brent crude futures rallied to $116 per barrel, the highest since August 2013. contract was at $116.60 a barrel, up about $3.67. U.S. West Texas Intermediate crude stood at $113.01 a barrel, up $2.41 after touching a fresh year high of $113.31 a barrel. Well, we have Damilola Akimbami, head research financial derivatives company, joining us. Dami, it's a new high, $116.
Yes.
Oil is on fire right now.
It is. I mean, the rally is on, I mean, it's unbelievable.
It's unstoppable.
Yeah.
Like, I'm wondering what can actually stop this rally right now?
Oh, well, a peaceful resolution of the war may have a dampening effect. I mean, I'm sure you're aware of OPEC's meeting yesterday. I mean, according to them, they feel that the oil market is balanced at the moment. And what is causing the price volatility is geopolitical tensions and not the current market fundamentals. So, meaning that as long as the war remains, as long as that war is ongoing and Russia continues with its invasion of Ukraine, we could see oil prices touch about 120, 125. You know, I mentioned that on Tuesday. So right now, that is what is driving it, because we're seeing the energy crunch, the sanctions are biting even and affecting the global energy trade. So oil price, gas, wheat, I mean, even gold, I mean, precious metals too, are benefiting from what is going on between Russia and Ukraine.
Quite interesting. But at the end of the day, we see the International Energy Agency announce plans to release about 60 million barrels
yes.
of oil reserves, you know, to try and alleviate this upward movement.
And it didn't have any impact.
No
impact.
Mean,
yes, the members, there are about 33 members of this agency, and the US is one of the countries, Japan too, and basically just to try and alleviate this supply tightness. But it barely scratched the surface. And bear in mind, one of the structural or fundamental issues affecting the oil market prior to the war was supply tightness. And that's why even last year, July, we saw OPEC and its allies agree to increase production by 400,000 barrels. And they've been doing that steadily and consistently since July last year. And even the meeting they had yesterday, they agreed to continue even in April. And if this might continue, I mean, a lot of countries, especially the US, they've been trying to get OPEC to be more aggressive with its output increase. But OPEC, as far as it's concerned, feels that everything is fine, no need to be more aggressive. And even despite the fact that they're increasing output, they're increasing member countries' quota, there are some countries such as Nigeria, Angola, that are producing below the quota. So for instance, in March, OPEC increased Nigeria's quota to 1.76 million barrels per day from 1.72 in February. But we're still producing about 1.4 million barrels. So that's at least about 300,000 barrels shortfall. I mean, and we know what is happening, the operational challenges, pipeline vandalism and whatever. So despite the fact that there's that modest increase by OPEC and its allies, but member countries are still struggling to meet up. And that's what we're seeing drive this supply tightness in addition to the war. And
so other members are struggling to meet up
yes. Not
just Nigeria.
Not just Nigeria. Angola too is struggling. And bear in mind that also because of the relaxation of COVID restrictions globally, so demand too is picking up. So on one hand, you have demand increasing. On the other hand, countries are not producing as much to bridge the gap. So this, with everything that is going on, I mean, oil prices are, the rally is going to continue for the foreseeable future.
It's really hot right now. And so far, Russia's energy complex has not, been targeted, by sanctions. You see that changing anytime soon?
Well, the sanctions haven't, or the energy facility hasn't been targeted by the sanctions yet. But we know that a lot of countries are already contemplating stopping the importation of Russian crude. So, for instance, even Europe, a lot of European countries are considering that because Russia is a major supplier of oil and gas to Europe, and they're considering that and they're going to damn the consequences, really, as basically part of these sanctions. And in a way, also, it's even also affecting Russia, because one of the concerns is that there might be crude supply disruptions from Russia, because once those sanctions hit, and Russia, which is a major exporter of crude, I mean, I think after Saudi Arabia is like the second largest exporter of crude, once those sanctions start to affect Russia's crude supply to the outside world, I mean, all bets are off. And so I don't know whether President Putin is going to consider that, because, I mean, any average president with everything that's been going on would want to think twice about what is going with the impact of all these sanctions on the markets. But it would be interesting to see how that plays out.
Yeah, I wonder what Putin has, up his sleeves at this point. But, gas is still, another issue,
Yes.
though. And it seems, I don't know, at some point Europe might be planning to wean off,
yes,
Russia's gas at this point. But it's going to be a huge
it's going to be tough, but it creates opportunities for other countries to fill up that gap. I mean, because once Russia is inaccessible or countries stop importing from Russia, other countries can fill up that gap. For instance, Nigeria, why can't we? I know that, yes, we don't produce enough. I mean, we're not even exporting enough. But, I mean, we could fill that gap. Because bear in mind, at a point in time, a couple of years back, maybe 5-6 years ago, the U.S. was one of our major importers. They were one of our major buyers of our own crude oil. But it stopped, obviously, because of the increase and growth of shale oil in that country. So, I mean, India right now is our largest buyer of our crude oil. Why can't we extend to Europe? So it creates opportunities for other countries to fill up that gap. And it will favor, obviously, our export earnings and our gross external reserves accretion.
Right.
Yes.
And this is a time where everything is going up.
Yeah.
Prices are rising.
Yeah.
Oh, everything. Talking about fertilizer this time, and that's another headache for farmers.
Yes, yes, because Russia is the largest exporter of fertilizer. So obviously, once
Russia exports everything.
Yes, it has a diversified export base, which, I mean, is something that we wish could happen, or we are hoping for the Nigerian economy. Russia is big in wheat, corn, fertilizer, oil and gas. So, for instance, and because of what is happening with the world, fertilizer prices globally are on the increase, and it's going to affect farmers, especially because the planting season is commencing, both in Nigeria and even globally. I mean, the onset of the planting season is going to start. And obviously, during the planting season, you're going to need various inputs. One of it is fertilizer. And if you can't access fertilizer, or the major exporter is being affected by the sanctions and cannot export, you have supply shortages, which would filter into higher prices. And for Nigeria, what does that mean? We do produce fertilizer. However, there's a gap. I mean, what we produce is about 5 million metric tons annually, but what the country requires is about 7 million tons. So we actually import to fill that gap. And we have, at least, there are major fertilizer plants. There's the Indorama fertilizer plant, there's Dangote fertilizer plants, we have Notori. But because of the challenges in that industry, so for instance, Nigeria has a low fertilizer consumption rate compared to available arable land, if you compare it to our peers in sub-Saharan Africa. So, for instance, our fertilizer consumption is about 20 kilograms per hectare of arable land. Ghana is about, let's say, 29 kilograms. The average in sub-Saharan Africa is about 33. So that, first of all, there's that low consumption. Another thing is the fact that arbitrage opportunities. So, fine, to an extent, fertilizer price in Nigeria is subsidized. So people take advantage of the exchange rate, they sell across the border and then bring back the dollar. So that creates arbitrage opportunities. And also, more importantly, is the fact that the use of fertilizer in Nigeria is inefficient. Because, I mean, there's been a lot of investment into the fertilizer industry. We've seen increased private sector participation, but we're yet to bridge that gap. And that's because of the inefficient use of fertilizer. What am I trying to say? For instance, the type and blend of fertilizer you would use in a certain area might not be the good blend or the right blend in another area. So if you use the wrong blend, it will affect your crop, it will affect yield, it will affect agricultural output. So these are some of the challenges facing the fertilizer industry in Nigeria.
Yeah, and you did mention that, we import to, bridge the...
Yes, yes, to bridge that gap.
That gap,
yes.
For fertilizer. And I'm wondering, is there any commodity that we don't, import to actually... bridge some kind of gap?
Well, for instance, cocoa. Cocoa is one of our strong exports. We're the largest exporter of tubers. So that's another thing. But again, yam tubers, to an extent, they are almost perishable. I mean, there's a limit to how long your yam tuber would last on the shelf. So again, preservation, storage facilities. If I'm going to export yam to the UK or to the US, the time frame, by the time it gets to the destination, I mean, if it's not properly preserved, you see it dries up and all that. So these are some of the things.
And yam has really changed.
Yes.
I remember before, back in the days, you could have yam for like a month.
Yes.
But now a week.
Especially if you, like for instance now, the New Yam Festival period is over. That was around sometime last year. So what you're going to be seeing in the market, if at all, is old yam. And old yam, I mean, but if you even look at it, the skin, the peels they're already drying up. So there's a limit to how long you can keep it. But I mean, we also have sesame seeds, cashew nuts, and what have you that we grow in this country. So I mean, at least this is an opportunity for the government to take advantage of the rising price, because there's so much opportunity untapped in the fertilizer industry. Again, because the type of land that we have is nutrient deficient, especially in the north. So that creates opportunity for growth in that industry.
Right. All right, let's, the scarcity is still on.
For scarcity,
and,
yes.
obviously, fares, transport fares are up at this point. I'm sure it's a domino effect. It's going to impact everything.
Yes, filters down into food items, because the fuel used to transport these food commodities from the farmland to the markets are being affected. Petrol is now being sold above like 200 naira per litre or even higher than that. Diesel is now being traded or sold at about 445 naira, 450 naira per litre. So definitely, like you rightly said, the domino effect. We start to see practically almost everything increase in price. On one hand, we could also start to see shortages, because if they can't transport those goods, logistics and distribution chain, the supply chain disruptions, I mean, it's going to have a significant effect on consumer prices, on commodity prices, and on the average Nigerian wallet.
All right. Well, what's your outlook for the agricultural, commodities at this point?
Well, I'll start with the domestic commodities. Yeah. Right now, at least when we carried out our survey at FDC, sometime last week, so that was towards in the end of February, we saw a decline in most of our commodity prices, and it's just basically because of consumer price resistance, because disposable income is still significantly low, despite the fact that planting season is going to commence sometime in Q2. But that price resistance is affecting prices. But we know that, obviously, but if you look at inflation numbers for March, and if this scarcity continues beyond March, we are definitely going to see an increase in commodity prices, which will filter into inflation. Now, for global commodities, or if you look at our slides, all the commodities, wheat, corn, sugar, cocoa, all the commodity prices are up. Wheat and corn, obviously, because of the war. What is affecting cocoa, despite the marginal increase of about 0.32%, what is affecting cocoa? There are concerns about weak demand at the airports. So because of what is going on, there are fears that air travel may be disrupted because of the sanctions and because of what is happening in Western Europe. And the airport is a major source of chocolate sales. So if that happens and we see a decline in demand, that could affect cocoa prices. And obviously sugar is rallying because of the oil price rally. Quite interesting. I guess we could call it the business of war. Yes.
All right, Damilola Kimbami, Head of Research, Financial Derivatives Company. Thank you so much.
Thank you, Ladi, for having me.
For coming on the program. All right, we'll take a moment now. Business Morning returns in a moment. All right, now for the markets, we have Aniete there standing by. Well, Aniete, we had a pullback yesterday. How are you seeing it?
Well, good morning, Ladi. It was a pullback, and especially when you consider the fact that it was the second day of March, after starting off in the green territory by by a moderate gain. But in fact, when you look at it, the loss that we recorded in midweek trading session was far more than the gain in the previous session. But we'll get to talk about that.
Yeah, let's look at the fixed income market.
Exactly. I'm starting off first with the fixed income market. And this is how the fixed income market turned out at the close of midweek trading session, Wednesday's trading session. Total number of deals carried out there was 15. And of course, we had bullish sentiment dominating for a third session within the week. So that also
continue this. We'll continue with the market in a moment. Let's just take a quick break. We'll be back in a moment. All right, Anita, let's take a look at what's happening in the fixed income market. All right, you carry on.
Ladi, yes, like I was about telling you about the fixed income market before we had that short break there. So the fixed income market, yes, for a third day in the week, bullish sentiments continues to dominate that space. And of course, we had a total number of deals carried out there was 13. of course, when you take a look at it, the average yield there, it declined further by 6 basis points to 10.8%. And across the benchmark curve, we also had average yield contracting at the short and mid segments due to demand for the January 2026 as well as the March 2027 bonds, while average yield was flat at the long end. So, but on this board here, what we had, the highest number of deals was carried out on the 22nd of January paper 2026, which had 6 deals at a value of 2.84 billion naira and a price high at 108.36. Over to the Treasury bills market, it's also had a rebound. It bounced back into the bullish side. It was bearish on Tuesday, but at the close of Wednesday's trading session, proceedings turned bullish. And that, of course, comes on the back of more than 400 billion naira inflows from the FAC allocations. So that's what helped that market segment to go back in, still in the bullish side, particularly the bond segment. Over to the open markets operations segment, average yield there expanded by 32 basis points to 3.3%. We had the highest number of deals there was carried out on the 24th of January 2023 paper, which had 19 deals worth 30 billion naira at a discount of 3.9%. And this is coming as the central bank conducted, today the central bank has conducted an OMO auction of about 30 billion naira on 3 maturities today. So the outcome of that will be announced much later today, but that's on the sideline today at the fixed income market. So it just tells you that the fixed income market is beginning to regain some vibrancy. We had already expected that, but to further drive up more expectation, according to what a trader I spoke with earlier today, he said he expects that investors' demand will continue and drive yields lower. Nonetheless, they maintain that their medium-term view is that the federal government's significant front-loading of borrowings for the first half of this year will result in an uptick in bonds yield. Then, for the Treasury bills market, they're expecting that the yields there will trend lower, particularly this week, and they expect that investors will sustain buying activities in reaction to moderation in the stop rate of the one-year paper at last primary auction. So that's it for the fixed income market.
All right, let's look at what's happening in the equities market now.
Okay, Ladi, so for the equities market, well, there you see it. It's in the red, 0.26%, and that translates to about 66 billion naira loss in value, but not really a loss. It's actually profit-taking, if that's what we call it. But all the same, the market ended in the red, still within this 47,000 region. And in terms of sectoral performance, well, it was a mixed board, but the reds have it instead of the greens. And in terms of activity, volume was down by 24.45%, value was down by 46.99%, while the total number of deals carried out there, in contrast to the previous session, was down by 7.03%. So now, but to tell us more about the market, in particularly when we look at the earnings results released on Wednesday, let's talk to Afolabi Benru, who is an equity trader at Stanbic IBTC Stockbrokers. Thank you for joining us, Afolabi.
Thank you, Anita, for having me.
Our market, our stock market, seems to be having a little bit of not too good time, particularly within the month of February, and then, of course, starting March in the red. So what's your view of the market as we speak?
Okay, so currently we're in results season, and we're seeing that a couple of corporates are releasing results into the market, and we're seeing some reaction from investors to these results. A couple of them are expecting the corporate actions which have been announced, which is in terms of dividends that have been announced, and we've seen a number of investors taking positions ahead of these corporate actions. Generally, the market has been very, very quiet outside of that. It's mostly been block trades that have been driving transactions. Yesterday was mostly in the likes of Seplat and Airtel Africa that we saw transactions in. Seplat Energy was actually up 9.33% following the release of their results recently. Airtel retail traded slack on the day, although activity was also quite busy in the main.
Okay, so now when you talk about the latest earnings, the market doesn't seem to be reacting to the latest earnings. As at yesterday, Nestle released its full-year results for 2021, and a day before, we also had other big companies releasing their corporate earnings. So why are they not really reacting to the markets? I mean, to the results.
A number of guys had taken positions ahead of these results, and they had kind of like priced these results in, and the expectation of the corporate actions from these results in. And if you look across the board, for example, it's not all the companies that were seeing a flat reaction. So if you look at September Energy, for example, September Energy was up 9.33% on the back of the results that were released as well last week. So we're seeing basically mixed sentiment across the board to the reaction, the results that have been released. I also remember when Bennett's numbers were up and were released, the stock also valued a little bit based on investors' interest in the stock.
Okay, so thank you, Falabi. We definitely will continue to keep our eyes on the market as usual, especially because there's money to be made there. So that was Falabi Benro, who's an equity trader at IBTC Stockbrokers. From that market, we move over to the smaller unlisted securities market. It is still down, still going back, still in the south part. 0.08% is what it printed at the close of midweek trading session at 725.30 for the index, while the market cap is still, well, felt lower, 614.17 billion naira. In terms of value, it is still lackluster, 16.85 million units, worth 14.88 million naira. Total deals, 5. So we will be looking at, well, investors have their preference for whichever market they're free. It's a free entry and free exit for the market.
Exactly.
Yeah. So that's it.
All right, Nita, let's hope that we bind the dip today and maybe we'll see some green in the equities market. Thank you so much for the update, Anita.
Pleasure.
All right, taking a look at other markets now. Let's look at the crypto market. We see market cap there is $1.91 trillion. It's down about 1.59%. Volume traded $92.39 billion trading in the total crypto space. It's down about 15.85%. Bitcoin dominance, 43.10%. Now we see price of Bitcoin, if I can get that on the screen there, we see it's $43,440 per Bitcoin, and it's down about 1.20% this morning. We're having quite a pullback this morning. We see Bitcoin, it did try to get above that $45,000 resistance zone, but it's traded as high as $45,000 at some point. Then Ethereum there, $2,914 per coin. That volume is 15.28 billion traded in Ethereum this morning. All right, let's bring in Olumide Additional now, financial market analyst. Hello, Olumide. Good morning.
Yeah, good morning, Radu.
So Olumide, is still about Russia and Ukraine at this point, and it seems like crypto is playing a part, you know, in this war. We're seeing exchanges are being advised to, you know, block Russians from using their platforms. How are you seeing this?
Yeah, I think one cannot undermine the systemic role the crypto market is playing in this geopolitical uncertainty. Just like you rightly mentioned, that the Ukrainian, especially the Ukraine government, highlighted to crypto exchanges to block certain Russians from optimizing or diverting their fiat sanctions to make crypto transactions. But you see, the tricky part is that crypto exchanges can only take those orders if they are being sanctioned by legal authorities. I mean, by security agencies, which through validation on those cases. So crypto exchanges cannot unilaterally take those actions. But what we are seeing right now is that the market is correcting based on the reality happening in the market, despite, like we mentioned, the importance played in the crypto market. And one case is that the U.S. Fed and chairman spoke to the United States Congress yesterday about the need that they need to tackle inflation, and that suggested that inflationary inflation will be put under control by increasing interest rates, and that is coming to play in a couple of weeks. So we are seeing investors trying to be a bit cautious. Also, reports that the United States Securities and Exchange Commission is attacking NFT content creators, looking at the fractalization of assets in form of securities, also weigh down the market, and that's why we are seeing Bitcoin and other altcoins moderating.
All right, but Olumide, let's just say, for instance, the exchanges actually agree to stop Russians trading on their account. What happens? I'm sure there's still peer-to-peer.
Yeah, but the thing you need to understand is that there's a fundamental issue here. You need to understand the objective of the crypto market. That was to decentralize power, and also it gave what we call financial freedom, and that was Bitcoin's unique case here. So a lot of crypto exchanges are a bit concerned that such would give them similar traditional finance parameter. But the truth of the matter is that, just like you said, it's almost difficult, to replicate what happens in traditional finance with crypto market. But nevertheless, because of there's some form of central control through crypto exchanges where people have IDs and stuff like that, it's left to be seen how that will take to effect. But I think most importantly, what this says is that there is no way that the crypto market will be 100% decentralized. Government at some point would try to take control, and that's what we are seeing.
Right, and interestingly, we see Ukrainians are getting, some kind of airdrop, from the government in cryptocurrency. Is it Bitcoin?
So many coins right now. Right now, authorities have spoken that they've raised about $35 billion. And I think as at yesterday, Dogecoin, Solana were the latest to pick. So there's so many coins that you could use to donate such cause. And we are now seeing the pretense that a lot of people are using such avenue to support the Ukrainian military. But my concern is that might really raise flags for regulators in future, because they will now see that they need to close the knuckle around such markets.
Right. All right, Olumide, thank you so much. We'll keep tracking as things play out in that market. Thank you so much, Olumide.
Yeah, thank you. Yeah.
All right, so that's it on the crypto market, and a wrap on the program today. Thank you so much for watching. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye-bye.